What's up, everybody? I am Jacob Sandoval. I'm the head of investor relations for the DeRosa Group. We partner with investors like yourself to buy large apartment buildings, and I'm super excited to talk about the topic that we have for today, and that is the tax benefits of apartment investing, because it is not about how much you make, it is about how much you keep, and a good understanding of the tax code can make a big impact on your investing career. So without further ado, let's hop into it. Quick disclaimer before we get started, I'm not a CPA and this is not tax advice. I recommend talking to your CPA to see how these tax advantages can apply to your specific situation. Let's start with the big benefit of depreciation. You see, the IRS tax code allows real estate investors to depreciate a part of the value of the building every single year. And the beautiful thing is that you get to deduct this, and it's a non-cash expense, because as you know, real estate is typically appreciating, but you can take a depreciation expense against your real earnings and your real cash flow. Let me elaborate. Here's how it works. The IRS assumes that the useful life of a residential property is 27.5 years. So you take the value of the building minus the value of the land, because you can't depreciate that, and you divide it by 27.5, and that is the amount that you can deduct every single year. So for simple math, let's say the building, excluding the value of the land, is $2.75 million. Divided by 27.5, that means you can depreciate or take a deduction of $100,000 per year. So if you have $100,000 in cash flow, you can deduct $100,000 and it looks like you aren't making money at all. And that is the beauty of depreciation, and it's 100% legal according to the tax code. When real estate investors say they aren't paying taxes, a big reason of that is because of depreciation. You can still have positive cash flow, but not pay any taxes because of depreciation. Now let's talk about cost segregation. While depreciation from a straight line perspective assumes that you can depreciate the building in equal parts over 27.5 years, the reality is an apartment building has a lot of different components. It has appliances, it has flooring, it has fixtures, and each of those components has a different useful life. So a cost segregation study is when a specialist will come into the building and break the building up into different components and outline the specific useful life of each of those. And the benefit of that to the investor is you can depreciate the specific components over a shorter period of time, 5, 7, 15 years. And the benefit is you can take the depreciation benefit much sooner on in the life cycle of the asset, which is going to offset your initial cash flow and provide that additional benefit earlier on. Now, let's add in the concept of bonus depreciation. According to more recent tax law, investors can actually bonus depreciate and take a lot of the tax benefit from a property in year one. Now, bonus depreciation is only at 60% as of this recording, and it's going to go down 20% every single year, but there is legislation talking about bringing 100% bonus depreciation back. But again, all this to say, when you combine cost segregation with bonus depreciation, apartment building investors can sometimes have extremely large tax losses in year one. And if you're very strategic about this, then you can wash out a lot of passive gains that are happening from other real estate activities. So bonus depreciation and cost segregation is a very powerful tool in apartment building investing. Another tax benefit of real estate investing is the ability to deduct interest. When you're buying an apartment building, you're taking on debt to purchase that apartment building. That's a huge part of real estate investing, is leverage. And when you pay back the bank, when you're paying back that loan, all those interest payments are tax deductible. And because these are larger apartment buildings, those interest payments can be quite large, serving as a large deduction, which is helping investors keep more money in their pocket. Before we move on to the next tax benefit, I want to talk about a free on-demand training that the DeRosa Group put on. It's how to quit your 9-to-5 job through passive investing. If you want to retire before you're 65, you need to put together a plan. That's why myself and Matt Bearcloth put on a free on-demand training that shows you a tactical plan on how to quit your 9-to-5 job. You can get that free training in the link in the description below. Let's talk about passive income and passive losses. When you own an apartment building or a rental property, these are considered passive activities. So when you're making income in real estate, it's considered passive income. And when you're making losses in real estate, it's considered passive losses. And all passive losses can be used to offset passive gains. So for example, if you have gains from other syndications or maybe your own rental properties that are happening in a certain year, and then you invest in a syndication, and because of cost segregation and bonus depreciation, and you have huge losses in another real estate related activity, those two things can be used to offset each other. So I talked about this a little bit earlier, but you can get really strategic with your acquisitions and your dispositions in the world of real estate. And because of all the built-in benefits from a tax perspective of real estate investing, you can save a lot of money on taxes. Last but not least, we have the 1031 exchange. If you are selling a rental property and you have a lot of capital gains because the property is appreciated over a long period of time, if you execute a 1031 exchange, that is, you roll the proceeds from the sale of the property into another larger property, then you could defer capital gains taxes. And so this isn't specific to apartment building investing, but we at the DeRosa Group, we have helped investors who have 1031 exchanges that they need to complete, and we've helped them secure apartment buildings on their behalf. We've partnered with them to do that, and we've saved them tons and tons of money on taxes. So if you have a 1031 exchange that you're looking for help on, we at the DeRosa Group might be able to help you. So you can book a call with us in the link in the description below. So there you guys have it, the tax benefits of investing in apartment buildings. I hope you guys found this video helpful. If you did, make sure to hit that like and subscribe button so you can catch the next one. We are super passionate about helping investors like yourself generate passive income and build generational wealth. If you want to get in touch with me and the rest of the DeRosa Group so you can figure out what investment opportunities that we have, make sure to book a call with the link in the description below, and I'll talk to you guys soon.